Good morning. We are at the end of May, and actually nothing but positive things to report in agriculture this week. July corn closed up 16 cents for the week. July beans up 10. July Chicago wheat up 18. Minneapolis stronger, a plus 33. July cotton up 1.22. That shows that it's not just the Midwestern situation that's turned bullish. And actually, I don't see anything bullish in the weather. So there's something going on in the outside market situation, probably on the export side, and probably improving trade relations as they're being negotiated again. July crude oil also friendly for agriculture, and not a lot of decline, but down 44 cents. So well, the grains are going, up along with cotton. Actually, energy prices going down. June gold up 178, indicating that the inflation is not over, and the dollar down almost 2% again this week. Huge decline, indicating that we're not going to solve the U.S. debt problem anytime soon. The dollar continues to crumble. Gold continues to rally. Is the gold going to replace the dollar in the international currency exchange, basically? Weekly crop progress, it's nothing bullish here, but the market went up anyway. Corn 78% planted, 5% ahead of normal. Soybeans 66, 13% ahead of normal. Spring wheat 82% planted, 17% ahead of normal. And actually, pretty much all of the other major crops are also ahead of normal planting. Wheat conditions, however, this was a little bit of a bullish development, down 2% at 52% good, excellent. Our yield model had been jumping every week, a third or a quarter of a bushel, actually reversed to a slight decline. But the important thing, it's not jumping every week. So there's a possibility that some disease is developing in some of those areas that received a lot of rain recently. Topsoil moisture is 70% adequate surplus. That's the same as last week. So we're really not seeing any shortage or, threat of drought, at least at this point. So, but planting is early. There's nothing bullish in the crop progress, but yet we had these positive changes in pretty much all of the grains, which indicates to me that there's something in the outside market situation that's becoming much more bullish, and these markets really want to go higher. This is the corn chart. This is the past year. There's our low last September. We rallied up here into February in corn, in the 515 area or so. And set back here, actually, we still have a lower recent low and lower highs. So the corn market, I would say, is still in a downtrend, but we're bouncing, and that's interesting. And that is actually despite early planting and potentially above trend yields in corn this year. Soybeans is a much more positive technical picture. Of course, we didn't get that rally back like we did in corn. Everybody thought, trade wars, Trump's going to initiate a trade war, and that's going to hammer ag prices again like it did with our Chinese trade war. But the result of that Chinese trade war is the U.S. clearly won. The only problem with it is Biden did nothing to enforce it on China. So China just ignored it, and all that work we did to negotiate favorable trade terms for agriculture completely ignored by the Biden administration for 4 years. Well, that's not the case now. In fact, Trump is talking about slashing or slapping tariffs on 50% of Europe because Europe isn't negotiating anything in good faith. And actually, U.S. agriculture has been virtually shut out of the European market for 30 years, and the U.S. farmers can compete very well in Europe. In fact, our prices are about half price or less from what the European farmers are getting. So if we had access to the European trade market in agriculture, we'd sell everything we produce to Europe because it's half price, basically, even after shipping. So That move by Trump to force Europe to negotiate in good faith and remove all their trade barriers, shoot, a 50% tariff on American products going into Europe in agriculture would be great if we could remove all their other obstacles, which have basically banned imports of U.S. agriculture for the most part. So that is not bearish. I think soybeans were down 6 or 7 cents Friday because of that announcement. But to be quite honest, that will have no negative impact on soybeans. If we force them to the table and negotiate, it's going to actually be bullish all grains. If we can get into the European market, who's basically shut us out for 30 years or more, and their excuse is always, well, we want to make sure our supplies are domestic for food because, we had to ration and some people starved and went without food during World War II. The war was fought in Europe. But man, that's 80 years ago now. You would think that maybe we could make some change there. But look at this nice bottom here in soybeans. And actually, soybeans have higher highs and higher lows. Quite honestly, on the spec side, we should be buying soybeans right now because particularly when they go down 7 cents on something Friday Trump did that's actually going to be bullish grains at some point. So regardless of what the commodity groups in the U.S. say, and the soybean groups seem to be the most anti-Trump in the entire country, and their bias obviously shows. So here we have wheat, Chicago wheat making new lows, but look at this rally. Actually, if that wheat yield model continues to decline, not only are the outside factors bullish wheat, but possibly wheat fundamentals in the United States, weather is going to become bullish as well. So it's an interesting developments. I think these markets want to go higher. Here's the spring wheat market, actually showed 33-cent gains this week. But this is a long, slow bottom we've had in these wheat markets. Quite frankly, if we can turn the wheat market around, we could rally not just for a few months, but maybe for years. Because you look at all these commodities in terms of value, in terms of how many bushels of grain can you buy with an ounce of gold, not measured in dollars, which is on the decline here, but measured in gold. Actually, these commodities are extremely cheap. Historically, maybe even 6,000 years lows in number of bushels, in the cost in gold, in terms of gold. So interesting. Cotton also gaining this week, and actually cotton has a nice bottoming formation. You kind of see the situation in agriculture. The one exception here is crude oil. Crude oil is actually in a downtrend, which is nothing but good for U.S. agriculture. Of course, the expectation this downtrend began with the expectation that Ukraine war would end and Russian energy would flow into the rest of the world like it had been. Russia is a big energy supplier. So far, crude oil is still going down with that expectation, but boy, what a disaster that has been for the United States. I don't think we have any choice but to get it ended. The only question now is what terms will they be? And clearly, Zelensky, United Kingdom, and France are doing everything they can to sabotage peace, and I'm not sure that that's going to be good for them in the end. Crude oil is definitely going down, still in a downtrend, and it's gone down a lot since that expectation began. Here's that gold market, made new recent highs at $3,500. I think we're on the way to $4,200. We've got a short-term downtrend here with some lower highs and lower lows, but here we are right probably against that trend line. We'll see if gold can break back out to the upside, but there's probably lots of reasons why gold is doing so. As far as weather, we have very cool weather forecast this is week 2, 8 to 14 day forecast. Basically, we've got cool weather in much of the country. In the southern region, they're talking above normal precip, but the north below normal. Actually, I still don't see any problem developing here weather-wise in the United States. And the dollar value, I've talked about that huge decline. We've dropped 10% since January, actually 12% to this low, and obviously we're heading down to new lows. And the big beautiful bill which includes tax breaks and and some cuts to U.S. budget. You know, all the wasteful spending our government does, it's actually atrocity. Spending 25% of GDP in the United States on government waste and abuse. You know, pretty much anything the government does is inefficient, maybe half as efficient as private business can do. So I don't know how we grew government in the United States so much, but it's a disaster. We have too much debt. We're spending $2 trillion more than we collect, and that bill is not going to correct that. So essentially, the United States is heading for a default in their currency, in their debt, and that's going to drive up interest rates, and of course, hammer this dollar even more. But the market knows that. It's taking care of it. Politicians will never solve that problem, even when you have a Republican, you know, the more responsible party. Even you have the Republicans. Maybe they just don't want to save the budget just to have Democrats get back in power and raid the federal treasury like they do every time. So clearly, this is a disaster waiting to happen. But a weaker dollar is bullish agriculture. Bullish export dependent things like what the United States has. We export half of our wheat, 40% of our soybeans, 1/6 or 1/7 of our corn, but we are very efficient relative to the rest of the world. The only place probably more efficient would be South America. But the United States can compete with anyone, especially the European farmers who basically have prices twice ours. We can get into the European market. That's an extremely bullish development. We'll see how that goes. But certainly we have a situation where it's clear the markets want to go higher. They want to bottom. We're at 5-year lows in wheat. We're at low prices in relative, certainly, to inflation in all these commodities. And in terms of how many bushels of corn, soybeans, or wheat you can buy with 1 ounce of gold now, it's at historic lows. I mean, extreme lows. So we're basically giving our product away in economic terms. And I'm sure there are speculative funds looking at those grain prices and thinking, man, there's going to be a lot of money made here when the weather turns something even neutral, not bearish like it has been. And you can kind of see that in commodities. Now, winter wheat yield model stopped improving, stopped jumping by 1/3 of a bushel every week. So we can develop some bullish weather. It's still relatively bearish on the weather side. There's nothing bullish on the weather side, but if you can develop some bullish weather here, these commodities can bottom and rally a long, long ways. I think the base is built. We just need to develop the fundamentals to push that higher. So a lot to think about. Certainly a great week for grains, higher prices all the way around. And in fact, all of agriculture, energy lower, and gold higher and the dollar weaker. You couldn't ask for a better week. Hope you have a great weekend and good marketing.